When you're working on building up your credit and improving your credit score, one of the best things you can do is use a credit card. But if you're not careful, that credit card can do more harm than good if you use it too much and don't pay it off. What's important to note is that your use of credit cards is a big factor on your credit score because other financial institutions and lenders look at it as an example of how you're going to manage debt. Making your payments on time, as a result, greatly impacts your credit score by up to 35% when it comes to FICO. Of course, using the right amount of credit is another important factor. For a financial institution or lender, this is looked at as how much credit you're using compared to how much credit you have available, and the result is the credit utilization rate. So what are the things you can do on your card to improve your score? First, make the payments on schedule. The most important thing that you can do is pay your bills on time because it's going to make a big impact on your credit history and score. In fact, it counts for 35% of your credit score. What's really important to note, however, is that your record lasts longer than even the last 6 months, though you can see improvements in that time. If you can make a habit of paying on time, you're going to establish a great record for your credit score. While you may think that transferring a high balance to a different card would be good, this actually causes an inquiry that can drop your credit score. In general, if you get a new credit card, you're going to get a little bit of a credit increase. However, which means that transferring that balance likely won't hit you too hard. The important thing is to make sure you keep old cards and accounts open, even if you transfer the balances. Because if you do this and you don't increase your debt, you'll actually end up with a lower credit utilization rate. Having that lower rate means you're going to have an increase in your score. Keep in mind that utilization rate or balance to limit ratio is important. It's a way of looking at the amount of credit you're using compared to the amount that you have available. To create your credit score, your report evaluates individual card utilization as well as overall card utilization. If you have a lower rate over all of these areas, you're going to be considered a better risk, and that can help improve your score. If you're looking to figure out your own credit card utilization rate, just add up the total balance on all of your cards and then the total amount available on all of your cards. Divide the amount used by what's available. Another thing you should do is to keep it diversified. You've probably heard about diversity being good, but you might not have known that it applies to your credit. A mix of credit types that are being paid off properly makes you look like a better risk and a more responsible person. When you apply for new types of credit, you show that you're good at balancing different types of debt and that you can process and utilize them properly. For those who have only had certain types of loans or debts, if you open a credit card compared to only having loans, you may actually see an increase in your score because of the new mix of credit. Sometimes it can be difficult to get a credit card if you have bad or no credit. That's when a secured card may be just what you need. With a secured card, you're actually putting money into a specific account that will cover the credit line. So, if you want a credit card with a limit of $200, you would have to deposit $200 into an account first. You would then need to supply the information about that account to whoever issued you the card so that if you don't pay, they can take the money. You may even be able to get interest on these deposits, depending on how they're stored. Now, if you don't make the payment, the institution that gave you the card can pull the money out of the account. It's considered a safety measure for the bank because someone with bad credit may decide not to make the payment. For those who don't qualify for a regular card, this can be the key that you need to get started on building up your credit to get one later on.